All right. What's going on, everybody? This is my second YouTube stream, and I'm pumped to be here. I hope you guys are pumped to be here. I don't know what I'm going to talk about tonight. I'm just doing these kind of I'm flying by the seat of my pants here, but I do have some general ideas, I guess, of things I've been thinking about a lot when it comes to the stock market. But one thing I do know is I didn't explain why this is called buy high, sell low when I did my first YouTube stream. So last week, we did an awesome stream. I was super excited to see all you guys, which I see you guys typing in the chat, what's up, what's up. But I need to explain why this is buy high, sell low. And the main reason for that, just the short summary is, I absolutely despise the phrase buy low, sell high. So if any of you guys were traders back in the 2020 to the GameStop era, which 2020 was kind of the COVID, everything kind of rebounded. So there were a bunch of people that, weren't very good at trading, made a ton of money. And that was also when I was like kind of a mediocre, middle of the road trader. And I got very lucky on a lot of stuff. But in that time period, there was a TikToker who posted this TikTok that basically said, hey, I'm making a living. All you got to do is buy low and sell when it goes to the top, and then buy again when it goes to the bottom. And then it was just born. Everyone saying buy low, sell high was like the new big thing. All over social media, stock twits, Twitter, it was just buy low, sell high, and everyone kind of bought into it. Which in my opinion, that's basically like going up to a baseball player and being like, dude, just hit the ball. Like, what's hard about that? Just hit the 95-mile-an-hour fastball. What's difficult about that? So over time, I just was like, this is so stupid. I hate this phrase. I can't stand it. So why not make fun of it a little bit? Why not name this buy high, sell low? And also, a lot of the time, that's what we end up doing. We end up buying high, selling low. Like, for example, I ended up buying SPY high and selling SPY lower over the past few weeks, which, stupid trade by me. But overall, that's why this is called buy high, sell low. I hope that makes sense to all of you guys. I just want to say warm welcome to everyone. I see you guys in the chat. I see tons of names in there. It's awesome to see you. I see some names that I saw last week, which is pretty damn cool. You guys are tuning in a couple weeks in a row. I see a couple new names in there. So thank you for being here. We're going to do these weekly until they peter out, which maybe they won't peter out. Maybe we got something cool here. So if we do continue having these weekly, just show up, talk in the chat. Let's have some fun. Let's talk about stocks. Let's talk about some stuff outside of stocks maybe. But today, we're going to do a little bit of market analysis later. I've got some 9 EMA stuff that I want to talk about. But first, I've been thinking about this a while. I've been thinking about this probably the last month or two because I work with a lot of kind of beginner to medium traders, so intermediate traders. And one of the biggest things I see, and I talked about this a little bit last week, is if you can survive, then a lot of the time you're going to kind of increase the likelihood that you're going to make it as a trader, which I know a lot of you guys are on that path. You're on the path of, I want to be profitable. I want to change my life. I want to potentially quit my job. And so survival is going to be huge for you guys at the beginning, which is something that I don't see a lot of people talk about. I see a lot of people talk about, making it big, how they made it big, all these strategies, all this blah, blah, blah. They don't talk about the fact that you just need to grind survive for the first couple of years. It's not about making money for the first couple of years. It's not about making money for the first 2, 3 even years for some people, maybe 4 for some people. It's just about surviving and advancing, which is a bit of a cliche, but that's what it is. You have to last long enough because each day, each trade that you last longer, you get experience. So every trade that I take, there's something I can learn from that trade. And if I don't have any more trades left because I blew up all my money, I'm shit out of luck. I don't have any more chances to get experience. So maximizing your time in the market as a beginner to intermediate trader is huge. I always tell people this, you need to figure out a strategy that's going to just get you the highest number of trades rather than at the beginning the highest likelihood of profitability. Because for a while there, guys, you're just probably not going to be profitable. You might have some beginner luck. You might stumble upon something good at the beginning, but there's so many things that you need to learn. It's very unlikely that you're going to walk through the door, stroll through the door, and you're just going to hit a dinger off that 90-mile-an-hour fastball. It's very, very unlikely. You're going to have to learn everything. You're going to have to learn stance. You're going to have to learn how to read things. You're going to have to learn all of these different things. So just survive, guys. That's the biggest thing here as a beginner trader. Survive. You need to figure out how much you're going to risk per trade. And I was talking with a buddy who he might even be in here. I'm not sure, but he was saying, I want to figure out how to possibly work with a certain amount of money. And basically what I told him was figure out a way to only risk a couple percent of your account per trade. Whether that's I'm going to put 10% of my account in one trade and then have a very tight 7% stop loss. You can do the math. Or maybe I'm going to risk 5% of my account. So I have a 5%. If I have $1,000, whatever 5% of that's going to be my position size. And then I'm going to put a 10% stop loss on that. Whatever it's going to be, guys, figure out a way that you can risk a small amount every single trade. And then you're going to have many, many trades. And when you have many, many trades, you're going to build tools over that time. And you're going to have a possible like tool belt start to build, this is a analogy that I always give people is like trading is an environment that's constantly changing. So imagine you're like walking through the woods. That's what I always tell people is walking through the woods, and you're going to come to a tree in the middle of the path. And you got to figure out a way around it, over it, through it, and you need tools to do that. And then you're going to come across maybe a lake that you can't get across. You're going to need to either know how to swim. You're going to either need to know how to build a boat. You're going to need to know something to get across. Then you're going to come to a cliff. You can't go around it. You got to go up it. So you're going to need a tool to figure out how to get up that cliff. Maybe you're just a rock climber and you just need a rope. Maybe you need one of those little weird hooky hammer things, which I don't know the name of right now. Is that an ice pick? I don't think you can climb with an ice pick. Maybe you need like those ninja things on your feet. I don't know, like the claw feet things. Whatever you need, you're going to need a tool to get up that cliff. And when we're talking about this from a trading perspective, the tools are going to be trading strategies. The tools are going to be risk management strategies. The tools are going to be position sizing. The tools are going to be emotional control, figuring out your brain. Those are the tools that we're talking about. But the environment, it's always going to be different. It's always going to be changing. And you need to have the tools to get through. You need to have the tools to let's go back to the trail thing. Maybe you're on the trail and then a fucking storm comes in. Maybe you're like up to your ass in snow. You got to know how to build a camp, build a fire. You need to know how to get a tent going. If you can't tell, I've been watching a lot of Alone lately. So that's what's on my mind is surviving in the wild. But trading is very similar. When the snowstorm comes, which right now, the market, what's happening, could be compared to a snowstorm. You have to have the tools to do it. You need to know how to short the market. You need to know how to buy the correct dips. You need to know how to find stocks, isolate names that are going to outperform the market. For example, I knew that Pepsi was going to outperform the market during a bearish cycle on the market, and it did. Why did I know that? Because in the past, I've seen that happen before. When the market is tanking, when tech is tanking, I've seen Pepsi perform well. I've seen Coca-Cola perform well. I know that they moved together. I knew Pepsi was going to do well. That's a tool that I have on my tool belt. So guys, survive. And just like for a little bit of perspective here for different traders, I know that we have probably some swing traders. We probably have some day traders. We probably have a lot of different traders, options traders, futures traders, whatever it is. If you're a swing trader and you're looking to just maximize the amount of trades, use a small percentage of your account, small stop loss. Maybe you're going to use 10% of your account with a 10% stop loss, risk 5% of your account every single trade. You would need to lose 20 trades in a row, stop out of 20 trades in a row to completely blow that. You're not going to stop out of 20 trades in a row. You're going to stop out of one, and then you're going to win one, then you're going to lose two, then you're going to win one, lose one, win two. You're going to go back and forth, and you're just going to maximize your time. We're just getting you minutes. It's like when you have a youngster on a basketball team. You're not looking to just like see this dude go out there and dunk over LeBron. You're looking to see this guy go out there and play a minute of good defense and get a rebound, and then you can pat him on the back and tell him you saw an improvement. I didn't play basketball. I don't know anything about basketball, but came to my mind. So yeah, guys, basically what I'm telling you is stay the course, learn those tools, and also document those tools. Every single strategy that you learn, get a Google Doc going. Get a Google Doc of, every strategy, every new thing that you learn, every tool that you add to your tool belt. That's what I did, and it made me feel like I was actually getting better at the beginning. So when I learned golden crosses back in the day, that went on my Google Doc. And then when I learned risking only a few percent of my account per trade as a risk management strategy, that went on my Google Doc. And then I learned momentum trades where, we have a break of structure, a retest of previous highs, it went up. I put that on my Google Doc. And then I learned that when I'm feeling like I need to take a trade in the morning, that's likely FOMO. Put that on the Google Doc. Put everything on the Google Doc. It's going to make you feel like you're bettering yourself, that you're giving yourself more tools to continue your journey. See if there's anything else I want to cover with that. Does anyone have any questions? Anyone have anything about that right now? What I will say, though, about kind of just being able to maximize your time is it's going to have a lot of periods where it feels like you're not doing anything and you're not getting any better. And that's just part of it, guys. You're going to have a lot of periods where it's like, dude, I'm not getting any better at this trading thing. If I don't continue growing, I don't know what's going to happen. That's okay. That's okay. 100% okay. Everyone has those. Everyone feels like, man, I really don't know if I'm getting this thing. Man, I really don't know if I'm having any success here. I don't know if I'm getting any better. That is okay. There's going to be periods. There's going to be weeks. There's going to be months where you are plateaued. It's going to be months where the market is just not fitting your strategy. And that's where we adapt and that's where we pivot. And that's where those other tools come in. That's when you're going to learn other tools. The plateaus, they force you to learn new tools. And if you don't learn new tools, you just try to force your old strategy in, you're not going to make it. Just flat out, you are not going to make it. You reach a plateau, that's when you've reached the cliff in your journey, and that's when you got to find the rope to get to the fucking top. Or that's when you got to put on your ninja claws and straight up like catwalk up that cliff. You cannot just bang your head against that cliff. Just doink, doink. I don't know why can't I get up this thing? Doink, why can't I get up this thing? Doink. Why can't I get up this thing? Doink. That's why you won't see me posting about, the 9 EMA every single day or every single week. Some weeks, I don't use it because it doesn't work. Other weeks, I'm posting about it every single day. I'm pounding my damn Twitter about it. I'm saying 9 EMA, best thing we've ever seen, best of the world. Because some weeks it works, some months it works, other weeks it doesn't, other months it doesn't. That's when I pivot. That's when I'll be looking for other things. Okay. Anything else I need to talk about that? I do not think so. Thank you guys for listening to my rant about how the environment changes and how the trading environment always is changing and you need to be adapting with it. Okay. I see a question someone asked, what do we got here in the background? I just put up Bitcoin. We're going to talk about a lot of charts here later. We're going to talk about just some names that I have written down on a sticky note, where is that sticky note? Here is the magical sticky note pad. Don't look at how dirty the back is. Actually, you can. But my sticky note reads, so let me get this moved over here. My sticky note reads Reddit, PLTR, PayPal, Amazon, and then I have a sneaky short squeeze, APLD. I'm going to pull those up later. We're going to talk about those as individual stocks that I'm watching potential swings or option swings for. And then I have some overall just market talk that I'm going to do a little bit later as well. The other thing I want to talk to you guys about while I'm on kind of this beginner trader rant, which if I'm getting too long on these or if you're not really enjoying the ranting part, just let me know. But I like doing it, and I think it helps a lot of people just kind of get some perspective as to like what to expect when you're a beginner trader and how you guys are going to have to get through all these things. The other thing I want to talk about, which we touched a little bit on last week, is just when you're in that like first 2 years, 3 years, how dark it can feel. Like the first 3 years of trading, you're going to go through the initial high. And this is just kind of a common emotional roller coaster that we see is the first emotional high is going to feel like you've just found the next big thing. You found a passion. It feels great. Like that was me in, I don't remember if it was like 2017, 2016, 2018. It could have been any of those years. I don't remember even exactly when I started, because I started paper trading back in the day as I just want to learn how this thing works. And I felt like this is the coolest fucking thing I have ever found in my entire life. And then you just hit a crash when you stop having the beginner success and it starts to get a little more real that you have to buckle down. And that's the time where we kind of weed out the people who are built for this and the people who aren't built for this. And that's okay. That's 100% okay. Not everyone is meant to be a trader. Not everyone is meant to be a successful trader. But what I want to isolate that kind of that little part though, where we weed out the people who are meant to be a trader and the people who are not meant to be a trader. I want to make it very clear that the people who are meant to be a trader, who make the right decisions to have success later, are not like geniuses in that moment, are not geniuses that are just figuring shit out randomly. All they have over the people who don't make it is perseverance. All they have is perseverance. All they have is just the ability to walk through each day. That's all it is they have the ability to continue trading. They have the ability to figure out a way to make it to next week, figure out a way to make it to next month, just claw and scrape by. It's not they're out here making thousands. It's not they're out here changing their life year one. It's not any of that. It's just they have found a way to just survive and advance. And so if you can do the same, and if you can remind yourself that the only difference between you and someone successful is that you just put in more time and you just continue trying, I think you guys you're gonna feel a lot better about where you're at. And just that one day you're probably going to turn a corner and you're probably going to figure something out, and that's going to be a game-changing moment for you. I can remember exactly when it was for me. It was when I decided that I was going to essentially focus on a swing strategy that I had seen a little edge in, but I didn't really know if it had a full defined edge. And back in the day, it was something that wouldn't work in today's market. It had to do with momentum and blah, 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 which right now we're not seeing a lot. But I decided I was going to focus on. I decided I was just going to throw in my chips and this has seemed to work for me. I'm going to see what I can do with it. Turned that corner, and I just kept working at it. I just kept chipping away at it. And there were days where I can't do this. I'm going to quit. I need to be done. I'm going to go find another job. I can't be spending this much time on something that doesn't, make me money, that doesn't pay my bills. But then I'd wake up the next morning and I'd be like, God damn it, I'm going to figure this out. Fuck, I'm going to figure this out. I need to figure this out. I mean, I can't take an L like this. I can't allow myself to quit at something that I know could be so beneficial for me down the line. And that's the difference, guys. That's the difference between someone who just folds and quits without much pushback. Like as soon as one thing goes wrong, as soon as, maybe they had a bad trade, lost a couple $1,000. A lot of people just, boom, done. They won't even turn to, all right, how can I lose less next time? How can I make sure that my next trade doesn't lose as much damn money? Those are the types of people who don't make it. I want all of you guys to be the type of trader who does make it, who realizes, okay, this is a common phase that everyone goes through, that I just need to be able to push through and work thumbs up. And yeah, let's keep rolling here. Let me see if we got any questions in the chat. I don't want to miss any. Started with like 7K and I'm down to 2K. Rest in peace. Hell no. That is not rest in peace, MK. It's part of the process. You're paying your market tuition, which it sucks. It's ass. No one likes to do it. No one likes to lose 5K. But I can tell you I lost more than 5K at the beginning of mine. And it's just that old market tuition. It's like you go to become a doctor, you got to pay a whole lot of money. You go to become a trader, you also have to pay a certain amount of money. It's different for everybody, but you do have to pay a certain amount of money. And once you pay that certain amount of money, though, you'll start to get it back, and then you'll start to get a little more back, and then all of a sudden you'll be even, and then all of a sudden you'll be making real money after you've gained back all the money that you lost. Okay. How do you determine if... This is a great question. This is a great question from What About Nick. How do you determine if you're going to use specific edges from day to day or trade by trade? Like, I'm going to buy a bounce off the 9 here, but I'm not going to buy a bounce off of the 9 here. 100% the answer to that is the rest of your system. And that's a shit answer because it doesn't give you a ton. But for me, I can kind of explain about what that is for me. For me, it's going to have to do with volume. It's going to have to do with the previous action from the day. So just a quick example. You asked about how am I going to determine if I'm going to buy the bounce off the 9 here, but I'm not going to buy it on the next one. The answer to that for me is going to be, how does the trend look at the start of the day? So my trading window begins an hour after open. So if an hour after open, we see a great trend to the upside, we see this awesome uptrend, high volume, we're seeing breakouts, we're seeing dips get bought up by the bulls, and then we see a dip to the 9 EMA, I'm going to be more inclined to buy that dip to the 9 EMA than if the morning was range trading. So perhaps the morning was up, down, up, down, up, down. You know, we get 3 tops and 2 bottoms. I'm not going to be buying the dip to the 9 because I know it's likely to cut right back through the 9. The other thing I'm going to be looking at is the volume on that pullback to the 9. So say we had a strong morning, which I'll talk a little bit about this. I have a 9 EMA little section here that I wanted to do. But say we had a strong morning and price is moving to the upside like we talked, where it's high volume breakouts, dips are getting bought up, and then we pull back to the 9. I want that pullback to be low volume with small candles. I'm not talking like they need to be like all doji candles or anything like that. Just small sized candles, because there's 2 things that tells me. It tells me, number one, at the pullback, there's not a ton of sellers because we're not seeing a ton of volume and we're not seeing a ton of success in those candles. And the second thing it tells me is there hasn't been any aggressive move, which would come in the size, like a larger sized candle, or just a more, I guess, a larger bodied candle. So if I'm seeing both of those things, then the pullback that I'm seeing, I'm more likely to buy than if it was, you know, a higher volume pullback or if there wasn't a great trend. And that's just one example. So that's just one single example of kind of an answer to your question. There's a ton out there. You know, if we were talking on the daily chart and we're talking a bottom bounce, like maybe I'm trying to swing trade something similar to that Pepsi chart, which, let me pull this up just as I'm talking about it. Pepsi daily here, because I took a swing trade. My average was like 142 something, which honestly, it sounds like I'm sucking my own dick, but it was just an absolutely fantastic entry by me. I'm not usually that good at entries, guys, but I bought it down here near these lows. And the reason I bought this is because I was seeing indications of buying from bulls. Like we saw this nice candle here. We also had previous support down here from the past. We had this where it was resistance in here. We had resistance here, here, here. So we had multiple areas where it was bouncing like that. And then we also just had a few different volume surges, like right here. We had this little volume candle here. And we did have this earnings candle, but to me, an earnings candle is going to be high volume. So I sometimes kick that one out. Higher volume here, and then we got a couple here. And then we had a nice bounce right off the reaction to the lows. If we didn't get that nice reaction to the lows, I wouldn't have been as interested in buying this. So that's kind of like the system around each trade will tell you which trades to take and which trades to avoid. All right. Damn, guys, I appreciate everyone being like, hit that like for the algorithm. That's fucking cool to see you guys in here saying that. Sometimes market tuition is more expensive than college, but it's worth it once you learn. John Walters, 100%, guys. Like, the reason that it is so important to just pay your tuition up front and get it done and then get past it is these skills do not go away. If you have an ability to find an edge in the market, you're going to be able to adapt, and you're going to be able to find an edge next week. You're going to be able to find an edge the week after. You're going to be able to find the edge 2 weeks, month, year, 2 years, decade, you're going to be able to adapt to the market. And that's why it's so important and so cool if you're able to get to that point. If you're not able to get to that point, that's okay too, guys. It's never going to be something that like you have to get there. You have to make it. If you fail as a trader, sometimes that just is what it is. But if you can get that tuition over with, and if you can become a successful trader, those skills you're going to have for the rest of your life. Like, that's something I feel very comfortable and confident on, is once you make it here, you're going to have these skills to fall back on. You're going to have these skills to, say you get a job in the future, you lose your job, you're going to have these skills, these trading skills. Granted, you're going to have to learn a lot of new stuff. You're going to have to adapt to the current market. But once you get an understanding of the emotions of the market, how to become a successful trader, you're going to be able to do it again in the future. And so maybe you take a break from trading, you come back. You're going to still have the skills to learn how to become successful in the current market. It's just the going through it, which I've said that already during this stream, but it's just the going through it. Once you go through all the trials of becoming a successful trader, it's just, you know that you could do it again. You know, if you somehow became unprofitable again, you could figure it out. You could survive. You could make it again. All right. The next thing I wanted to kind of get into here, guys, is the 9 EMA. I talk a lot about the 9 EMA, and I've talked about it for years now. I've used it day trading, so this is going to be a little bit more for day traders. Maybe next week we'll talk a little more about a swing trading strategy, or perhaps like maybe even an investing strategy, because right now the current market is a little bit skewed to maybe be a little bit better for investors than swing traders. So maybe we'll talk investment strategy next week. But I did want to get through the 9 EMA today. There's a lot of stuff that I really, really like with the 9 EMA. I use it daily basis. It's something that I'm constantly working with. So I'm going to pull up SPY. We're going to talk about a move that we saw yesterday. And then I'm going to show you guys a few graphics that I created that kind of give you a good idea of how you should be trading the 9 EMA on like a 5 or a 10 or a 3-minute chart. But let's get into SPY here. I do want to say, just while we have a little lull here, I appreciate the hell out of all of you guys for being here. It's really, really cool that I can just on a Wednesday hop on here, talk to you guys, give you guys some trading education, and you guys all just come and hang out. It's really, really fucking cool. So thank you for being here. And yeah, let's talk 9 EMA. How about that? Okay, so this is yesterday's 5-minute chart. Let me make sure that it's looking about right on the... There we go. It is looking good. So this is yesterday's 5-minute chart, and the 9 EMA is obviously that yellow line here. And this is a line that I have on my chart every single day when I'm doing scalping. If you're new to me, I am a very simple day trader. I'm not using any complicated strategies. I'm not using anything that has some insane dark pool behind the scenes, crazy this, that, crazy, blah, 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 indicator with, this indicator on there on top of it stacked with this one. I'm using 9 EMA, volume price analysis, and my thick zones. If you guys don't know what the thick zones are, it's just support and resistance. It's just an indicator that I created that has support and resistance. But this is the 9 EMA. That's what we're focusing on today. The 9 EMA is an exponential moving average that follows price pretty closely unless price really gets moving. If price is moving to the upside or the downside very aggressively, then we're going to have more space between price and the 9 EMA. The reason I use the 9 EMA is when we get a solid trend going, the 9 EMA is a very common area for the dip to get bought up. So you can see already right here, early in the morning. So this is the open. You can see this yellow part over here, and then this gray background are regular trading hours. During pre-market, price is just moving around. After open, price dips pretty significantly. We head up, touch the 9 EMA, and then we return back down towards those lows. Do it again, return back down towards those lows. So already the 9 EMA is showing that it's strong and that it's holding for the day. The next thing that we see is the setup that I was talking about yesterday. I basically went nuts on Twitter about this. We broke the 9 EMA, which you're never going to have a day where price always stays above or below the 9 EMA. You're always going to break the 9 EMA. But the key thing that happened is right here. We got above the 9 EMA. We consolidated. We tested the 9 EMA with very low volume. And then we broke out with higher volume. This is a setup that I call the 9 EMA flip and rally, which I don't think I've ever seen anyone call that. So maybe I've like coined some shit. Maybe I need to get over there and trademark it. But the 9 EMA flip and rally is one of my top 5 day trading setups. And it's so simple. It's essentially one of the most simple things that I do. And it doesn't take really any brain capacity other than looking for low volume pullbacks after the 9 EMA is broken. And you want to see the 9 EMA get broken with decent volume. And here, we saw it get broken with a little bit higher volume. And we did get an increasing volume 2 candle sequence. So let me just get a little black line in here. Increasing volume down here. So you saw it break, increasing volume. What does that tell us from a VPA perspective? That tells us that as we got through that key level, there were more buyers interested in price. That's a good thing. That's what we want to see. And then right here, from a VPA perspective, the dip down to the 9 EMA had very, very low volume. What does that tell us? There's not a ton of sellers right now. So we had an increase in buyers as we moved through the 9 EMA. Low volume means not a lot of sellers. It's not an extremely aggressive pullback to the 9 EMA. What's likely to happen in that situation? It's likely that buyers are going to step back up and push it to new highs. And that's exactly what they did here. They bought off the 9, pushed this thing all the way to highs, and you could have made a decent chunk if you were trading SPY options, if you were trading futures, which that's what I do. I do a little bit of both, a little bit of futures, a little bit of options on SPY. Futures, I'm on ES, but regardless. And then what do we do next? We come down, test the 9 EMA, buying again. We come down, we test the 9 EMA, buying again. We come down, we test the 9 EMA, buying again. But this is a good dip here too. Let's talk about this one. Let me get rid of this line here and move it over here. So when we got this previous bounce where we pushed it to new highs, we did have increasing volume again, which let's kind of do this here. Let's make it a little pyramid if I can. It might not let me. I'm going to try. Oh, man, it doesn't want to. I'm not very good with technology, guys. I'm sorry. There we go. Okay, it doesn't look great. It's kind of fucked up, but regardless. Anyways, you can see what I'm talking about here, where, oopsies. Uh-oh, I'm totally flying off the handles from a tech perspective here. Anyways, you guys can see what I'm talking about here, where the increasing volume on the breakout, again, that is so significant in this situation. What that tells us is that there were more buyers buying as we popped up. And then what happens on the decline? Declining volume, pull back to the 9. And what does that tell us again? It tells us that there's not a ton of sellers. There's not a ton of sellers. Declining volume, guys. Hammer that into your fucking head. What does declining volume on a pullback mean? It means the sellers are not coming in with a ton of strength. There's not a ton of sellers pushing into this. There's not an aggressive amount of selling. It's just a pullback. It's just a stop at the gas station. It's just a fuel up before we head higher, and that's exactly what happened here. Declining volume to the 9, push higher. So guys, what are you going to buy on these 9 EMA pullbacks? Low volume, declining volume. It's that simple. I've been trading this setup for years now. Since I think I kind of started using this in 2020 or 2021. Declining volume pullbacks to the 9 EMA. It's that simple, guys. Wait for a strong trend. Wait for a good-looking trend with volume similar to the one on this chart right now. Increasing volume on the breakouts. That's what we want to see. High volume breakouts. Followed by lower declining volume pullbacks. That's it. That's it, guys. That's literally it. Anyone recommend a good futures prop firm? Not Apex. Apex can suck a wiener. Not Apex. Top Step is a really, really good one. That's the one I would probably recommend the most. Top Step is a good one. No problems with Top Step from my end. I did use Apex for a long time, and I didn't have any problems, but I did know a lot of traders who had problems with them. There was a period where I had to put in videos to Apex talking about my trading, and then they made a bunch of hoops to jump through and blah, blah, blah. I'm not going to deal with that. I actually opened my own futures account, which is why I'm not using Apex or Top Step right now, but I do have still one active one with Apex and one active one with Top Step, and Top Step has much less hoops to jump through. Top Step is just a much more professional feeling company. So I would recommend Top Step in my opinion. Okay, I do want to go over a couple graphics about the 9 EMA. Let's pull these up here real quick. Oopsies, I dropped it. I'm going to pull that and I'm going to copy and paste it so that it looks a little prettier here. Okay. So here's my 9 EMA graphic right now. And let me get it pulled over here a little more so you guys can see it. So this is the, technology again, guys. I'm not fantastic with it, like I said. Okay, there we go. So this graphic I made a long time ago. And it's very, very simple. It's the 9 EMA flip and rally. But the thing that I want to bring your guys' attention to, is this confusing with it on the gray background here? I kind of feel like it is. I'm going to make it bigger. It like blends in. Gray on gray. Sorry. But the 9 EMA flip and rally here. What we're talking about, which we just talked about, this 9 EMA flip and rally, this is a solid example. I want to talk about the candles on this example. I want to talk about how these candles form on the pullback. And the first thing that we see here, the breakout. So price breaks the 9 EMA and strong candle. The bulls were buying significantly on this candle. And I want you guys to notice where this candle closed. So this candle closed up here above these previous candle highs. So we had a couple candle highs, a couple wicks on the upper side here. And the fact that this candle closed above those highs is significant. That's something that you would need to note if you were looking to trade this setup intraday. The next thing we need to notice is how small this first red candle is compared to this green candle. So this red candle here, it's probably 1/4, 1/3 the size. More like 1/3. 1/3 to 1/2 the size of this green candle. So it's significantly smaller than this green candle. And it doesn't even get close to reaching the lows of this candle. That's significant as well. There's no aggressive selling here. There's no significant selling. It's pretty much just a small pullback candle. And then the next candle, which would have been the one that you could feel comfortable entering on, a lower wick forms and we hold the 9 EMA. And the candle closes above the 9 EMA, which is very, very significant. When you're able to get a push below the 9 EMA and then bulls step up and close back above the 9 EMA, you know that there was real buying taking place on that 9 EMA. They saw it drop to the 9 EMA. They said, this is the place I want to buy on. And then they actually deployed those buying orders. That's a significant candle because it shows the ability to hold that 9 EMA. That's something that you guys can look for in the future. Now you can add it in with that volume that we just talked about, where it would need to be a high volume on the break of the 9 EMA, lower volume on the pullback. And I'm going to repeat it again just because I have to, guys. I'm a VPA trader. The reason we like high volume on the 9 EMA break is it shows that there are more buyers interested in the price and interested in buying price up. The reason that we like the pullback to be lower volume is because it doesn't show a higher interest. It doesn't show a high interest from sellers. So we have high interest from buyers. We do not have a high interest from sellers. So there's a lot of people wanting to buy. There's not as many people wanting to sell. There you guys go. A couple questions in here. So on this chart, would you be executing your buy when it touches the EMA, even if the next candle is going slightly below? I can see how volume works, but obviously you don't see the volume as it moves. So yeah, what I would be doing, which this is what I usually do, is after our first pullback candle closes and I see that there's declining volume on that first pullback, I'm looking to buy the next few 1 to 2, usually not 3, 1 to 2 candles if we continue seeing that lower volume. And I do use a stop loss somewhere below the 9 EMA, but I like to give it a decent amount of wiggle room, which I do have another graphic for that I can show you guys. But I'm basically buying a zone around the 9 EMA. I'll buy some right above the 9 EMA, I'll buy some right on the 9 EMA, and then I'll buy some right below the 9 EMA. And then I'm going to give it that wiggle room to move, because obviously price is never going to move perfectly. Obviously price is never going to respect the 9 EMA exactly, which this example is a great example. And also, if I delete this, these examples are also great. You know, you're never going to see a perfect 9 EMA bounce. You're never going to see it respect the 9 EMA exactly. So I'm going to buy a little bit above, I'm going to buy a little bit on it, and then I'm going to buy a little bit below it, and then give it some wiggle room, which wiggle room is going to have to depend on how volatile the current market is and how much risk you're willing to take on. But for the most part, you know, I'm willing to put a candle or two of risk below the 9 EMA. So if we were to drop, you know, right like this here, where we dropped a little bit below, closed one, I'm okay holding through that. If we were to close another candle lower, that's when I'd start to really think it's probably time to stop out, because this is spent a whole candle below that 9 EMA. But also don't forget to give it that wiggle room. It does need some. It's never going to be perfect. Like all of these 9 EMA bounces, which is yesterday. This is yesterday's 5-minute chart. All of these spent some time right above the 9 EMA. You know, right here, we popped above it. Then we went below it, popped above it, went below it before we got the real move. Here we popped above it, and then we went back lower. Here we went below it, and then we went higher. Here we went a little bit below it and went higher. And I do see another question. What time frame are these candles? 5-minute, guys. These are the 5-minute chart. I love the 5-minute. I can talk about how much I love the 5-minute for an hour straight and why I love the 5-minute. It's just the most balanced for me. That's the summary. It's just the most balanced. Okay, let's go next graphic here, which is the stop loss. And this one is actually like a perfect example. Let's paste this in here. We're going to do the same thing. We're going to talk about this thing. Make sure it's brought to the front so that I don't have an issue with it going behind. Okay, so 9 EMA stop strategy. So we flip the 9 in this example here. We drop below it, and then we flip it right here, but we come up, we test it, and then we go lower. And then you're going to do a short entry on the beginning of the candle, you know, on the candle exchange. We test the 9. Like I said, maybe you short a little bit right below the 9, and then you get another add right on the 9. But you have to give it some wiggle room. In this example, my thing says 20 to 30 cents above would be the stop loss. So if this was a long 20 to 30 cents below, but that's going to depend on what you are trading, guys. I need you to understand that. It's not going to be the same for every single trader. It's not going to be the same for every single stock. If you're trading Apple, maybe you can get away with 20 cents. If you're trading Tesla and Nvidia, which are much more volatile, maybe you're going to need 50 cents below or above the 9 EMA. But I want to emphasize, give it that wiggle room. Do not have just a hard stop 2 cents below the 9. You're going to stop out a shitload, and then it's going to move in your favor, and you're going to be like, what the hell just happened? Why did I get stopped out? And then this thing ran in my favor, and I missed the entire move. I don't want you to miss the move, so do have that wiggle room between the 9 EMA and your stop. And another thing about this, when you're playing the 9 EMA, is move your stop loss lower. So as the 9 EMA moves, you can sell some, you can take some profit, but then move your stop loss lower if you're going to have runners, and just let those things run. use that 9 EMA as a gauge for when you need to sell. If it gets below it, then you can sell. If it drops below it, then you can take your profit and run with it or whatever. But just continue trailing your stop loss, because if you have your stop loss above or below the 9 EMA and you're riding, let's just say you're trading to the upside. Let's just say you're in a long right now. You move to the upside, you move your stop loss slowly, holding it right below the 9 EMA, using that wiggle room we talked about. You're going to have a key support level between price and your stop loss at all times. The 9 EMA is a key support, so you're going to have it between price and your stop loss. That's always a good thing. We always want to have a key level between where the price is and where we stop out, because price is going to come down, it's going to test that key level, and a lot of times it's going to bounce higher. So then you're going to be in an area where you didn't stop out and you can continue to ride this thing, rather than, if you just had your stop loss at a random area, you could stop out and then it could immediately bounce. So having the 9 EMA between price and your stop loss is really key here. All right, let's see if we got any more questions here. Yep, so I'm looking at the 5 minute. I saw someone asked about time frame. 5 minute is what I usually trade on, and it does work on the 10 minute. It does work on the 1 minute as well for day trading. I just really prefer the 5 minute. The 5 minute has always been something that it's worked the best on for me and my strategy. But like I said, 1 minute, 3 minute, 10 minute, 5 minute, 15 even, it will work on as well. So are you trading a daily or a weekly option? So when I'm day trading SPY, I'm usually going 1 to 3 DTE. I don't like 0 DTEs because they're too volatile for me. I don't like going too far out because they won't give me the percentage that I want. And this is only when I'm day trading. If I'm doing anything more, if I'm going to hold this overnight, I'm going weeks out. But for when I'm day trading, I like 1 to 3 DTE. 1, 2, or 3 are the 3 that I'll look at. Typically, I like 1 or 2 more than 3. But I will trade 3s sometimes. It also depends on how long I think this setup is going to take to play out. If I'm trading this 9 EMA bounce right here, I'm probably looking at 1s. If I was trading a double bottom that had taken a while to develop, I'm going to look at 2 or 3 DTs. And the reason for that is the decay that you see on a 1 is going to be much greater than on a 2 to a 3. So if I think this is going to take a while, if I think there's a high probability of a possible trap to occur before this moves in my favor, then I'm going to want to take a longer DT so I'm not dealing with as much decay as if something as small as a 9 EMA bounce that developed over 1, 2, 3, 4, 5 minute candles, so 25 minutes. I can take a 1 DT and not really feel too much pain of the decay because it's going to work out 1, 2, 3, 4, 5, 6, 7, 8 candles later. I'm going to be at high a day. I'm going to be in the profit. I didn't really need to worry about the decay. The 2s and 3s for me are more for if there's going to be a longer developing setup. So maybe if I liked the chance that this was a bottom, but I wasn't really entirely sure how long it was going to take, then I would buy myself a little bit more time. What time frame do you use to swing weekly cons? If I was going to be trading weekly cons, I would be looking at the daily time frame most likely. That's where most of my swings come from an options and a common perspective, is the daily time frame. I don't really like to swing on anything smaller. I know people will talk about the hourly, 4 hour. I'm more of a daily chart kind of guy when it comes to any sort of swing trade. I like seeing a full day on each candle, and I like being able to see the bigger picture of what's happening here. What is the trend? What are we seeing? Are we seeing accumulation? Are we seeing distribution? Are we seeing buyer strength? Are we seeing seller strength? And a lot of that comes on a daily chart. And so I've never really had a ton of success on the hourly and 4 hour chart. Take it for what you will. So if I'm swinging anything, it's going to be the daily chart. I see Chad said if you get into a 0 DT, it has to move in your favor pretty quick. That is exactly right. If you get into 0, you pretty much have to have no downside before it moves in your favor. It pretty much have to have the exact perfect entry, and then it has to have a decent move because there's going to be decaying. I I just traded. This is a funny story. Yesterday, I thought I was buying 1DTs on SPY, and then I ended up buying zeros, and I thought, damn, dude, these are moving so fucking well. This is awesome. You know, these are moving so quick, and I'm making a ton of money right now. And what happened was I went up, I saw 100% profit at a set price. And then price went down, and then it came back up to the same price about 10, 15 minutes later. And I was only at 90% profit, or like 85 or something. That's how quickly 0DTs will decay when you're seeing volatile moves midday, IV is flying around. That's how quickly 0DTs will decay on you. It could be 20, 30 minutes, and there's a 10% difference at the same price. So that's why I don't like 0DTs. That's why I like ones at the minimum. All right, guys. I'm seeing a ton of nice chatter in the chat. I do got to get rolling here. I do got to get moving through the charts that I wanted to talk about. I hope you guys enjoyed that little 9 EMA segment. Next week, like I said, we'll do something for the swing traders, something for the investors. We'll talk a little bit more larger time frame, daily stuff. We'll do a strategy too. I'm not sure what. If you guys have any requests, feel free to put them in the chat right now. I might do something. I really, really like 20 and 50 MA crosses. I also really like on the daily chart accumulation and distribution. I might talk about one of those. Those are some possible things. It'll probably be a game time decision. But if I see like an overwhelming strategy that you guys want me to talk through, if you guys pop it in the chat, if I see something that comes up multiple times, maybe I'll decide to do that. But now we got to talk about the current market. Let's get to a daily chart here. And let's get rid of this 9 EMA, because the 9 EMA is not a daily indicator for me. Also, I want to quickly shout out all the Slappy Central names I see. I see Barney in the chat. I saw Jules in the chat earlier. All the guys and ladies who are in Slappy Central, you guys are fucking awesome. Thank you guys for being here and supporting me on this little YouTube thing I'm doing. If you guys didn't know, that's my Discord. That's my trading community that I hang out with every single day. Every morning I hop into a live similar to this where my chart is up and stuff, and we talk. And these are the people that I trade with every day. So thank you guys for being here. You guys are cool. You guys are awesome. Now let's talk about SPY. So this is the daily chart, and we had a pretty clear distribution. We talked about this last week where we had this kind of resistance zone that SPY had rejected. And what I said was I wasn't really sure how to feel about the current sell-off, because we were in this area where price was kind of just chopping around, and it was a decent volume sell-off, but I really didn't know how I felt about it. That has changed, guys. We had a massive move between last week's stream and this week's stream. So when we were talking last week, price was about $5.95. Price has now seen $5.72, almost $5.70. Price has refreshed much lower, and there was high volume. We got this high volume sell-off here, high volume bounce, pretty high volume sell-off, and then a high volume doji. What I want to bring to your guys' attention is the historical data of SPY bouncing between 5 and 10% from highs. So highs on this were 613, 614. Historically, SPY has bounced in that 5 to 10% from highs range. So let's draw those in. 5% is sitting at 582-ish. 10% is sitting at 551-ish. And the last thing I'm going to put on my chart here is the 200 MA. Let's get this color in here. I'm going to make it the same color as the 9, because why not? So there's the 200. There's 5%, which let's mark these. I want you guys to be able to screenshot this chart if you want it. So it needs to be like an artist made it. It needs to be beautiful. It needs to be my best work. So here's 5%, and here is 10% from highs. A little bit more. There we go. Ambular's here too. Hell yeah, Ambular. Shout out Ambular. She's been an OG. Traded with her for probably 3 years now. Something like that. Anyway, SPY here. So we rejected the top. We moved to the downside. We moved more to the downside since the stream last time. And now we're in that 5 to 10% dip area. And we're also right near the 200 MA. I'm going to be 100% honest with you guys. I think the 200 MA down to 550 is the buy zone. I'm not going to be cryptic. I'm not going to say if this. I am bullish on the market between 550 and 570. I would like to get closer to 550. I would like to get a 550 ad. If we can get all the way down there, I would love that. But I am bullish on the market between 550 and 570. And the other reason for this has to do with the President Trump. We talked about him last week. We talked about the tariffs. We talked about how shitty the tariffs have been. I think he knows exactly what he's doing. Pretty common thought. A lot of people think that Trump knows that he's killing the market. I think he is as well. I don't think he's going to let it get too bad. I don't think Trump wants to be the president who made the stock market drop 20%. I don't think he's going to allow that to happen. I think he's going to see what he's doing with those tariff comments and how much it's impacting the market. And I think he's going to get his buddies to add. I'm not going to lie. I think that's part of it. I think he's going to get his buddies to add. I think he's going to get himself to add. I think he's going to get his family members to grab a little SPY. We're about to make this thing turn around. And then I think he's going to bounce it. And I think it's going to be between this 570 and 550 area. Just to be clear, guys, 570 to 550, I am bullish on SPY. Could this drop a little lower than 550? Yeah. But again, give it some wiggle room. Don't have a hard stop at 549. Let the thing move a little bit. If you scale in between 570 and 550 and you've got a 560 average on SPY or whatever you're doing, give it 5 or 10% more. So give it down to 520, 530 before you decide to stop out or anything like that. But I'm officially flipping bullish on SPY. I do want to talk a little bit about some other big names here. Let's talk QQQ. And the 200 MA is doing work on QQQ. And it just had a high volume doji. From a VPA perspective, what does a doji candle mean for us? It means that there's a lot of indecision at that current price. And what that means when we're seeing a trend like this, let's zoom in here. What it means when we're seeing a trend like this is that the trend is not as strong as it previously was. So this downtrend, this rejection on QQQ was strong. It was heavy-handed. It was aggressive. They got to the 200 MA. The selling was not as strong. The selling was not able to push price lower. Is that because of the 200 MA? Maybe. Is that because someone on Wall Street decided to hit the buy button? Maybe. Could be either of those things. But it is happening right at the 200 MA. That's all I've got to say about QQQ. All right. I want to talk about Tesla, Nvidia, and Apple next. Tesla here, 200 MA, and also it's in my buy zone created by these previous highs. So if I want to draw a zone here, goes down to about right here. We pull that zone across. 1, 2, 3, 4, 5, 6 highs on Tesla are within this zone. It's bouncing off of that zone. Similar to QQQ, it just had a doji candle and then a green candle today. It's trying to reclaim that 200 MA. I'm buying more Tesla. I'm not going to overcomplicate this again, guys. That's kind of something that you'll notice with me over time is I'm not going to complicate this. A bunch of highs in this area. The 200 MA, Tesla's at a pretty steep discount. I'm buying more Tesla. I like it in this zone. That is what it is. I'm a fan of the stock. I think it makes a lot of money. I think Tesla is going to go through a little bit of a rough patch like we've been seeing because of the alienation of parts of their customer base. Elon's done a little bit of that. There's a lot of people who won't buy Teslas now. I think we're seeing the worst of that. I think there's been a lot of people really scared. I think that we're seeing that panic selling. We've seen that panic selling, and I think we're about to bounce back. I think Tesla's about to head right back up to about 380, 400 within a few months, and then we're going to see 500 end of 2025, maybe early 2026. So I'm long on Tesla. I think this is a great place to add. And I think it's also a great place to potentially help the market reverse like I'm talking about. I see a cool question in the chat that I want to address here. What did you do before trading? So before trading, I'm still relatively young. I'm late 20s. But before trading, I was in college. I was in high school. But the main thing that I did was I worked nights at a warehouse, and it drained the fuck out of me. And it was one of my primary motivations for figuring the whole trading thing out was I didn't know what I was going to do after college. I was blessed enough to, be motivated to go to college, get a college degree. I didn't really want a job with my college degree. I kind of went in, got a psychology degree that I didn't really want to use just to have a degree. And I can't really see myself even using that now. So I knew I didn't want to do anything with that. And I was working these nights at this warehouse, and it was just god awful. Like I was on a forklift all night, go to class the next morning, forklift until like 1, 2, 3 in the morning, depending on whenever we got our papers done. Class, forklift, class, forklift, class. And it just was not working. And I still have right there, I still have my my clipboard. I can go grab it. Then you guys would see I'm wearing pajama pants. But maybe next time I'll show you guys my clipboard. It has my name on it. It has like a bunch of fucking tape wrapped around it. And it's one of my like weird motivation things. I keep it put up on my wall because I don't want to ever go back to that. Like, I don't want to ever be in a place where I have to go do that. I don't ever want to, slack off at trading. I don't ever want to get too confident. I don't ever want to let my ego get in the way of my trading to a point where it sends me back to having to work like a night at a warehouse or something like that, because like that was soul sucking. It was draining. It was, I don't know. It was just a real like eye opener for me that I want to do more. I want to get to a place where I don't need to, spend my days getting tired as fuck every night and then going to do this during the day and then going back to work and just constantly working my ass off. And so it's a big motivation, and I can get like a tad bit like sentimental thinking about it and how far it's come, because I'm in a place now where I'm blessed that I'll probably never have to go back to that. It's probably not probably. I will never have to go back to that, and that's pretty special, and that's something that I hope my content and stuff is helping you guys get to a place where if you're working a job you don't want to be doing, if you're working hours you don't want to be working, I'm hoping that the education that I'm putting out could possibly help 1, 2, 3. If I help one person, which over the years I've gotten some DMs of people that, I've already helped quite a few people get to different places, different financial outlooks, potential financial freedom for some people. But if I can just continue helping people, that's why I post this education. That's why I do these streams. That's why I post on Twitter. That's why I make videos. That's why I do camps. Is I've been there. Like I've been in a place where it was like, I'm waking up and I don't want to be going to where I'm going. I want something better for myself. I want something better for my future family. I want something better. I don't want to be doing this anymore. I need a better way to make money so that I can take advantage of the freedom that life gives. And so if I can help you guys do that, that's kind of the whole goal here. That's the whole goal of the ThiccTeddy education. That's the whole goal of this YouTube. That's the whole goal of my profile, is to just push and pass along what I've figured out that helped me, in hopes that it will help you guys. All right. A couple more questions here. Someone said, how's my cat doing? He's good. We were supposed to get his cone off today, so I'll just go into that real quick. He had something going on with him that the vet had never seen, and they did like an experimental surgery on him, and it seemed to work out well. It was about a couple weeks. I think it was like 3 weeks ago he got surgery. He's doing good now. We were going to get his cone off today, but then we had a snowstorm, and so he has to have his cone on until next week because we got to get him in and get him like imaged again. Like they have to do a bunch of like CAT scan and stuff to make sure that everything's going well, and then his cone can come off. But he's doing good, and hopefully he can make an appearance next week. If he gets his cone off, he can chill behind me on the cat tree or in a bed, and we can hang out with him. He's kind of my good luck charm when it comes to trading. When he was in the hospital for a while there, trading was tough because he sits on my lap every morning when I trade. So when I'm doing my live trading and I'm talking to everybody, he's usually chilling right here, and he purrs all morning, and he just wants pets all day. And so it was weird for a while there when he wasn't hanging out with me. But he's doing good. We got anything else here before I move on to some more charts? I appreciate all the kind words I'm seeing in there. I see some people saying how much the stuff helps and how much the education and does for them. So I appreciate that. When is the volume boot camp happening? I haven't decided the exact date. End of March is the tentative timeline for that. I'm thinking end of March, and I did one last year, and it was basically a base volume camp. This one's going to be similar, but it's going to have improvements. So it's going to be a lot of the same information, but I want it to be kind of a more full camp than last time. Last time, there were a lot of pieces. There were a lot of things that I don't disagree with now, but things that I wish I would have expanded upon and fully explained. So it's going to be better this time, basically. I don't know why I'm going through all that explaining. It's just going to be better. It's going to be a better volume camp. How much does it cost? It's going to be $20. $19.99 is how much volume camp will cost. That's how much the camps have been, I think, last year and this year. $20. So $20 for a full week, like, that's a fucking deal, guys. I would take advantage of that. I know a lot of people out there who charge a shitload for camps, and usually they're way worse than mine. Not to be cocky or anything, but mine are pretty damn good. They're pretty sweet. They're 90-minute classes similar to this, but instead of a lot of ranting and instead of a lot of rambling, it's going to be focused education on specific topics. And I'm going to have a PowerPoint on my screen, so there's always going to be information on there for you guys to read and see, and I'm going to be talking on those points. So yeah, if you guys are interested, it'll be end of March, and I'll be posting about it quite a bit more on my Twitter from here on out. Do I need a computer to get full benefits of your camp? Probably not. If you can, so they're going to be on YouTube. All of the videos and all of the classes will be on YouTube. So if you're getting the kind of the full effect of this stream, if you're able to see all the stuff, if you're able to hear all the stuff right, you'd be able to hear all the stuff for the camp, because it's basically going to be a live stream like this, except it's going to be private. So, you can't see it unless you have the link. Okay. Yep. Nathaniel is right. Or you can pay $19.99 a month and you can get to be in the Discord and you can get all the camps, because the camps do take place in my Discord. They'll be recorded. So if you guys are, people who work during the times that I'm going to be doing camps, it'll be recorded so you can go and watch them later. It's essentially just a YouTube live stream just like this. So you know how these stay up and you can go back and watch them, or you can do whatever with them. It's going to be the same exact thing. And they take place right in my Discord. So all you got to do is you got to be in my Discord, which if If you pay the 20 bucks, you'll get to be in it, and then you'll get the link to these streams, and then that's the camp. It's just going to be a full week of YouTube streams that are private to people in my Discord. All right, guys, let's get moving here. While I'm talking about NVIDIA and Apple, drop any charts that you guys want in the chat, and that's how we'll kind of end this stream here. That's how we did it last week, is I did some charting for you guys and talked about names that you guys had wanted me to. And so if you guys have any, drop them in the chat. I'll talk about NVIDIA, Apple, and then we'll get into some more individual potential trades. NVIDIA here on this daily chart, the biggest thing we have to talk about with NVIDIA is just this upper trend line. We talked a little bit about it last week, but it is pretty significant, and they are kind of breaking the 200 here. How much that's going to impact this, I don't know. This hasn't been below the 200 since 2022. So it's been 3 years since this has been below the 200 MA, and we're below this previous high. We're below this. We're not below, but we're coming down to test this 97, 98 to 100 area. That's going to kind of be the line in the sand on NVIDIA. Right now, I'm not bullish on NVIDIA. I was bullish on Tesla. I was bullish on SPY. Right now, I'm not bullish on NVIDIA. I think that it needs to come down and refresh this zone down here, which starts at 100 and goes all the way down to about $92. If we got into that zone, I would probably change my tune. I would probably be a lot more interested in taking a long, and honestly, I might be interested in an investment in NVIDIA. I do like the fact that NVIDIA has been growing at a rate that they are, and that NVIDIA has basically been not a monopoly. That's not the right word. I was about to say monopoly, but they've been the best player in their space for years now. And they've also grown at a rate that we have not seen in a long time. Every single time you see an NVIDIA earnings, it's like, these expectations are insane. These expectations are above and beyond. They beat it. They smashed it out of the park. They're like, I don't know. I don't even have a good analogy, but NVIDIA is incredible when it comes to earnings. But right now, they need a refresh. The other thing I want to talk about here is this previous trend line we saw. I think this is more of a trend zone. Let me get a zone in here. So we saw this previous upper trend line on NVIDIA, which had 1 top, 2 tops, 3 tops, 4 tops. And that could also line up with this zone. If it takes a little bit, so say for the rest of, until the middle to end of March, I don't know why I can't English today, but the middle of, Jesus, stumbled over that twice now. Maybe it's a tongue twister. Middle to end of March. Maybe if we consolidate until the middle to the end of March on NVIDIA, this zone would correlate with this trend line. They'd be in the same place. If they're in the same place, we would have 2 different key levels in that area. We'd have the support here from back in 2024 and then later in 2024. And then we would have this trend line that we have yet to test. We got close to it back in January, but we didn't actually test it. So if we can have both of those in the same spot, I would be a long. So basically what I'm saying here on NVIDIA is I'm not long right now. I'm actually thinking it's more short for the time being. It's at 117. I think I would flip into a long at $100. $100 is the area that I would start buying NVIDIA. 100 down to about $92. And I would like that to happen at the end of March. So then we can have both of these key levels in the same place. I'm going to talk about Apple, and then I see PayPal, I see Target in there, and I will talk about those. Melanie has to leave. Thank you for being here, Melanie. Have a great night yourself. I hope you enjoyed the stream tonight. Let's get over here to Apple. And what I want to talk about with Apple here is the key level that it has and how it's been respecting it. You can see all of these tops over here if you look left a little bit. We have a very key level, 1, 2, 3, 4, 5 different times back in 2024. mid to late 2024 that we respected this key level. And the fact that we're holding it again and we're holding the 200 is coming up. I have to lean bullish on this. We've respected the 200. We got close to it back in January. We immediately bounced. We got close to it again today. We immediately bounced. And we also held this zone today. So for me on Apple, I have to be bullish. And, with that, we have Apple, we have Tesla, and we have SPY that are all looking bullish for me. I have to just lean bullish overall, which I feel a little bit dicey about it, especially with SPY potentially having room to 550. Because if it does move to 550, I could see Apple, I could see Tesla taking some further dives. But with SPY being so close to the 200, with SPY being in that 5 to 10% range, I can't really be a short. I can't really chase short on anything. I can't really encourage any sort of selling. I really think it's a time that we're going to see Trump emphasize and kind of take a stance switch where he completely changes his tune into a more bullish, which he's been doing some dumb stuff. He knew this. He knew the impact. Trump is not stupid. Trump knows how to pump the market. Trump knows how to push the market one way or the other. He's not dumb. He's not dumb at all. He knows what he's doing. I think he's going to completely change his tune. I think he's going to bounce SPY in this area. And I think it's going to pull Tesla. I think it's going to pull Apple. NVIDIA, I don't know. I'm bearish on the NVIDIA chart. But if SPY does start to return towards those highs, I don't know. NVIDIA could possibly just chop sideways. NVIDIA could potentially have the weight to go lower. Could potentially have, respect the market and go higher. I just don't really know. But I am bearish on the NVIDIA chart. That's the one chart that I really didn't like out of the four that I just did: SPY, Tesla, NVIDIA, Apple. The other three, I do like. All right, I do want to go through, and I know a lot of you guys have been waiting for this. I know a lot of people, you want to hear about, I want to buy calls on this, I want to buy puts on this, I like this long, I like this short. I'm going to go through some individual names now that I have on my list. One of them we talked about last week. That's what I'm going to start with, and that is going to be Reddit. I see Mickey in the chat. Mickey's another guy who's an OG from the Discord, so thank you for being here, Mickey. Thanks for the kind words about the stream. It's gonna be a weekly thing, guys. I'm just feeling it. I'm feeling the juice of this going well. I'm feeling the juice of this being helpful for people, and so I'm thinking this is a weekly thing. Buy high, sell low on a weekly basis. Are we all down for that? Everyone cool with a Wednesday night stream from now on? We'll see, but for now, it's going well, and I think it's high likelihood that we keep this ball rolling, at least for like March and April, right? At least we give it a couple months, and then we decide then. Okay, so this is Reddit, and I'm going to draw the zone that I drew last week, and then we'll talk about it. Okay, so Reddit has this very, very key level. Was resistance back in November of 2024. Support in December. Support in December again. Support in January 2025. Support in January 2025 again. We ran up from about 160 to 230 in 2025. It's only March 5th, so we've had a decent move in 2025. We came down. We tested that zone again. I talked last week, and what I said was I would like to buy calls if we get a nice move on Monday or Friday above this zone. And that was Wednesday, so that's right on this green candle here. The next day, we got a bearish move, and then a bounce, and then an upper wick. And so we haven't really had a clear area that I've said, okay, I do like this for calls. I do like this for a bounce. I'm basically going to parrot the same exact thing as last week. I like calls if this can hold above this zone for the next 2 days. So today's Wednesday. If Thursday, Friday, this can hold above this key zone, I like calls on Reddit. I'd probably buy a month out and hopefully only hold for momentum through the next week. Hopefully hold for 4 or 5 days. But I do like calls on Reddit if we can hold above this zone for the next 2 days. And what I mean, guys, I'm going to draw a line. This is my line in the sand. 163. If we can hold above 163 for 2 days, what that'll tell me is, number one, that bulls have been able to hold above this price. And number two, we saw aggressive buying at these lows, and we did not need to revisit those. Those are the two things I like. Holding above this level and that aggressive buying that we saw down here when we got below that zone. So Reddit, again, a few days of consolidation. I will be looking to buy calls. Same thing as last week, but I don't know. It didn't develop right, so we're going to just go with the same exact thing because the setup is still there. The next one I have is PLTR, and it's a very similar setup to that Reddit setup that I just talked about. PLTR here, we had nice uptrend in 2024. If we want to go back a little bit, you guys can see how well this thing did, which shout out to Pickleball Scott. I play pickleball with a guy named Scott, and dude told me about PLTR like long time ago when this thing was many dollars cheaper. He held through this entire thing. He's still holding, and he's been right this entire time. I kind of told him I thought he was an idiot and a nice. I was like, Scott, yeah, man, I don't know about that PLTR company. Like, I don't know what they do. I don't really know, Scott. And kind of gave him like the, where it's like, I don't want to say that I'm not going to invest in the company that you're telling me. Like, if you tell somebody a company and they're just like, ooh, yeah, thanks, bro. Like, you're like, oh, they're not going to go buy that. I kind of gave him that, which was an asshole. And then he was fucking right. Like, the guy knew what he was talking about. Pickleball Scott. Shout out Pickleball Scott. But yeah, this PLTO chart, similar to that Reddit chart where we have this key zone here. Let me draw it in here. I want to include this little top right there. Beautiful. So we have this key zone from December again, and then January, and it got topped in 1, 2, 3, 4 different times, this zone. We popped up similar to Reddit. We're coming down. We tested it, and then we got 2 massive dip buy days. So we gapped down, this was Friday. We gapped down from $85 down to $79 on Friday. Immediately bought it all the way back up to $85. Same thing happened the next day. Not the next day, 2 days later. We opened about, we closed about $83.50, opened about $80.30, and then we immediately bought it back up, topped at $89 and closed at $84. What that tells me is the dips are getting eaten up here. When buyers see this touch $80, when they see that morning gap down, they are buying the shit out of it. They like PLTR at this current price. The buyers are strong at $80. I'm going to be looking for the same thing I am on Reddit. If this thing can hold above this zone, so if the line in the sand on this one, about $86. If we can hold above $86 for a day or two, I'm going to be very bullish on PLTR. Very bullish on PLTR. And now we're going to take a little commercial break so I can check my NBA parlay. Oh, man. The parlay's alive. The parlay is alive, baby. I don't know how many sports gamblers we have in here, but I parlayed the Timberwolves spread, the Celtics spread, the Heat spread, the Bucks spread, the Nuggets, and the Grizzlies spread. And the Timberwolves covered -7.5. The Celtics covered -9. The Heat are currently down by 3 when my spread is +12.5. Bucks -10. They're up by 15. Nuggets are kind of getting crushed right now. They're down 7 points, but it's the first quarter. All right. I don't mean to get any of you guys into gambling. Don't do it, guys. If you're not a gambler, don't get into it. It's too fun. It's too much of a good time, especially on a random Wednesday night when you're watching NBA. Don't get into it. But anyways, NBA parlay still alive. That's what I'm talking about. I've got not a lot of money on it. It's like $30, but it is to win a fat chunk of money. It was like $30 to win. I don't know if it was like $900 or something like that, but we're still alive. Maybe it was like $1,000. I don't know. We're still alive. All right, let's get moving here. I did see a name that a lot of you guys brought up, and I want to say it was already on my sticky note. PayPal. It was already on my sticky note to talk about. So let's move over to PayPal, and let's talk about PayPal. So this chart obviously had pretty good move at the end of 2024. So we saw $57 all the way up to about $92. This was my stock of the week as well last year in 2024. We had this double bottom here, move to the upside, a little bit of a higher low sequence we saw where it was higher low here, higher low, and then we saw this distribution up at the top, which is pretty clear when you see this gap up, sell off, massive sell off, another strong sell off, and then this crazy gap down. We're seeing distribution up at that level. But am I comfortable buying PayPal? Do I like the stock at the current price? We're seeing this move to the downside. We have some aggressive volume here, which I do want to highlight before we get into why I'm bullish, because overall, guys, I am bullish on this. But we did see some aggressive selling. We saw one here where it was a decent volume spike compared to what we'd seen previously. And we have not seen any strong buying, which is the really important part here. Where is the buying? We don't see any strong buying yet. We've seen, let's just go through every single candle since this earnings. So since earnings, gap down, high volume. The next candle, significantly lower volume. It's still the day or 2 days after earnings, so it's not, you can have some higher volume just based on institutional involvement 2 days after earnings. So the increase in volume there compared to what we saw before it's not something that I'm really concerned with. So after that, what do we see here? After, we're 3 days after earnings, we've returned to normal volume. We see 3 days of declining volume, and then we get our first little higher volume spike. And what is it? It's a bearish candle with a decent sized body. And then what do we see? We see 4 green candles, none of them significant volume. And then we see 2 red candles, none of them significant volume. And then we get another little spike. And what is it? Large body, higher volume. Lower volume green, high volume red body, large body. 1, 2, 3, 4, 5 candles, mediocre volume. Higher volume red, decent sized body, followed by a lower volume green. So we haven't seen bulls step up yet. But why I'm overall bullish on this is we're testing such a key zone here that I just have to be bullish. If they break this, then I'll be bearish. But right now, this is such a high reward, low risk long. I just have to be bullish on this. If we pull this across, I just want to show you guys a zoomed in look first. We basically tested my zone to the exact cent. It sits about 66.46, 66.50-ish, whatever you want to call it. But I want to show you all of these bounces and rejections that occurred in this zone. Back in 2022, we tested this zone. And from this zone, we bounced $68 to $100. We tested it again in 2022. We bounced from that 66 all the way to 88. And then we kind of chopped around a little bit, but then we tested it from a bearish side. So we tested it on the opposite direction in 2024, and we rejected from 68 to 56. Again, 68 to 61. Again, 69 to 60. Again, 68 to 57. And then we flipped it. Similar to that 9 EMA flip and rally I was talking about. We got above it, Tested it, 67, and we ran all the way to $93. So this zone has not been something to mess with. This zone has not been something to mess with. This is an awesome zone. This is a zone that has worked 8 times, like I just showed you. I have to be long on this. If it breaks it, I'll be short then. But until then, I am long. So long, PayPal. Okay, I did kind of tease this earlier. I have a fun name here, APLD. It's called Applied Digital Corporation. And the reason that I like this is it is a high short percent company right now, which let me go get the exact short percentage. I don't want to talk out of my ass and give you guys a number that isn't real. APLD is 31.3% short. Let me get that. Paste it in here. This is the short float. 31.13% short. That's significant, guys. That's something that you cannot ignore. That percentage of short means that at any time, shorts could get trapped, and this could go to new highs, or this could have a very volatile swing. So I have to potentially think this is a decent short squeeze opportunity. I've traded these in the past. I do like a good short squeeze here or there. I'm not the type of person who's like, you know, getting a boner over GameStop or getting a boner over AMC or, you know, having ape in my bio or anything like that, which if you guys do, I'm not judging. I'm not judging. I'm judging a little bit. I swear, I'm not judging. I'm kind of judging a little bit. But yeah, I do like APLD. I think technically this thing looks good as well. You can see we do have a little support zone here, and it did just bounce out of that the last 2 days. One thing I will say about this, we didn't have any high volume on the last 2 days bounce. We had 1 and 2 days green candles, solid bounce out of this support area, but I'd like to see a little bit higher volume. I'd like to see bulls step up a bit with this bounce. So if we get another candle, decent volume on that, I would be all in for this to come up here and test this $10.50, $11 area. All right. I'm going to go through and look at some of the charts that you guys have requested. If you have any last-minute requests, this is the time to do it, because after this, we're going to wrap it up. That's going to be the end of the stream. It's been 90 minutes. We've got a few minutes left here, and then we're going to call it good. Let me check what we've got up here, and then I'll tell you what I'm going to chart. All right, we've got Target. Let's pull up Target. Ooh, interesting. See where the SMA 200 is. Ooh, this thing is. I will say I do think Target, just from a consumer perspective, has gotten mad expensive the last few years. Like, Target used to be like a Walmart alternative, I feel like. Just a little bit nicer. But it's really gotten like luxury priced the last few years. Chart-wise, man, I don't know how I feel about this. So we have 2 clear levels here on this daily, which I know I'm having to zoom out quite a bit here, so it's kind of difficult to see the candles, but we have 2 very clear levels. The first one is going to be this resistance up here. Honestly, we can just stretch it all the way down to here. There is a lot of upside until that level, though. And the second one is going to be this support level down here, which we do have some more downside until we get to. So honestly, right now on Tesla, this isn't Tesla, this is Target. Right now on Target, I would wait for this support zone. Once we get to this support zone, I am going to be long on this 110%, which sits right about 108 down to $104. So 104 to 108, that's going to be the area where I flip from I wouldn't buy this right now to I would buy this. And the reason for that is that's just such a strong support that we saw. The reason this support is strong, I do want to talk about this for a second, is the immediate reactions that we saw to it. So the first time we tested it, we bounced pretty significantly. It's not like a crazy, crazy bounce, but it was an aggressive bounce. You know, we saw only a few candles here that caused it to bounce right back out. And then the next time that we got a bounce, a move out of it, it was that earnings, which I get that that's news, but also buyers did really step up here and bounce it right out of this zone. And you can expect when we come down and test that zone again that buyers are going to be present there because they've been present in the past. And so for me, 104 to 108 I think is the long area on target. Until we get there, though, I'm not really interested in this. I wouldn't really buy this until we get into this support zone. I see a question. Someone said, what site do you use for your charts? This is TradingView. I can't recommend it enough. TradingView is the best charting, I would say. It's what I trade on. So I use TradingView to do my day trading. I use it to chart my swings. I use it to chart my investments. I basically use it for every single type of charting that I need. Could you please chart BBAI? Yes, I can. BBAI. Big Bear AI. Oh my God. Do we have another Reddit Tesla looking chart here? Not Tesla. Why do I keep saying Tesla when I'm not talking about Tesla? Reddit PLTR. That's kind of what we're talking about here, is this where we have this key zone from 2024 and 2025 that we're coming down to. It must have been like the AI move, because I see AI in this name. It must be that Reddit and PLTR were getting big moves off the AI hype, and this must also be getting big moves off the AI hype. But this is the same exact sort of chart setup as Reddit and PLTR. We had these highs in 2024 and in early 2025. We popped above a very significant amount, which, if you guys remember the Reddit and the PLTR chart, we did the same thing. We got very, very extended above this zone, and now we're coming down to test it. The thing I really like about BBAI, oh man, I just saw that we have earnings. That fucks this whole thing up. I was about to say I really like this chart. I was about to say this looks really good from a volume price analysis perspective, but earnings just screws this whole thing. So the reason that earnings screws this whole thing is it's not going to be a technical move. Earnings can move this either direction, and it's not really going to be technical. It's going to be based on fundamentals. So this charting we're doing, which I'm going to do and I'm going to finish out, doesn't really matter to a degree, because earnings tomorrow are going to send this to the upside or are going to send this to the downside. But the reason I like this chart, if the earnings didn't happen, so let's just remove this, show earnings, boom, it's gone. It doesn't matter. It doesn't even exist. There's no earnings tomorrow. The reason I like this is this volume decline here. This is very nice. We see this volume decline, and then volume stays relatively low. So you got this decline, and then volume stays low. The reason I like that is because volume declined and stayed low on this downtrend. Granted, the beginning of the volume decline was on this uptrend, but we got the reversal. We got the refresh that we needed. So the fact that volume stayed low on this decline, significant, and looks good for me. The other reason I liked this technically is because of the same thing as Reddit and PLTR. We were coming down to test such a significant level. It was about 415 up to about 480 was the significant level. We topped there once, twice, 3 times. And not to mention, we also did have this little lower trend line here. Might be more of a trend zone. Let's get the zone in there. There it is. So we had, 1, 2, 3, 4, 5 different bounces in that trend zone. So we had multiple different key levels right below current price when we bounced earlier this week. Tuesday, we bounced off of it. Yesterday, we bounced off of it. Today, we bounced off of it. And it came after that declining and low volume pullback. So strong technicals here on BBAI, but earnings tomorrow could potentially send those technicals out the window. How can I see the earlier part of this stream? So this is going to stay up. All you'll have to do is search ThiccTeddy. If you find my YouTube profile, It will basically be right under the live tab. And then I'll also post the link in my Discord and on Twitter. So if you missed it, you can just go click on that. It should start from the beginning and you'll be able to see the rest of it. All right, guys. That is going to be the stream. I appreciate all of you guys for being here. This was awesome. I had a great time. You guys are really cool. Thank you for being active in the chat. We're going to do this again next week. So show up ready to have fun. Show up ready to learn. I'm probably going to do another little rant about how to be successful as a beginner trader and how to keep your morale high, and probably a little bit of game theory stuff. I've been doing a lot of work on just my own psychology and kind of the thought process behind decision making. And I do think I want to talk about that next week. So why I make the decisions I make and why I do some unorthodox things that maybe you guys could use to apply to your own trading, to your own decision making. So that's going to be something I talk about next week. Again, I appreciate you guys so much. This is so cool that I get to come on here, talk charts, talk trading, talk psychology, talk the process of becoming a successful trader. It's so damn cool. So thank you. I could thank you 100 million times, but thank you. I'll see you guys next week. And yeah, be safe out there. Trade the market. Don't do anything dumb. Use a stop loss. If you guys have any questions for me, you can always hit me up on my Twitter. You can DM me. You can hit it in my replies. Just be like, hey Teddy, I'm from your stream and this is my question. So feel free to do all that stuff. I appreciate it.